Hey everyone, ready for another deep dive?
Always.
This time we're looking at Ami Organics Ltd. And their Q2 FY25 performance.
Fresh off the press.
We've got their investor presentation and all the reports right here. So let's break it down, see what kind of insights we can pull out.
For anyone prepping for a meeting,
We're just,
keeping tabs on the organic chemicals world.
Exactly.
I think the first thing that jumps out at me is this revenue growth. It's not just good, it's stellar.
Okay.
A full 43.2% jump year over year.
Wow.
Taking them to a cool R's. 2,467 million.
That's impressive.
Especially,
Yeah.
given that the global chemical industry has been facing some headwinds.
Yeah, for sure.
So to pull this off,
Yeah.
it really suggests they're doing something right.
Absolutely. And if you look at their investor presentation, they actually break down where this growth is coming from. And it's kind of like a two-pronged attack, right? So you've got the pharmaceutical intermediate segment,
Right.
which, was a big hitter last year.
Yeah.
I mean, 79% of their FY24 revenue
79%.
came from that. And then, of course, they've got their specialty chemicals segment.
Right. Holding steady.
Yeah, at 21%.
Okay, but here's what I find fascinating.
Yeah.
It's not like they're just riding on a couple of
Big products.
big products.
Right.
I mean, we're talking a seriously diverse portfolio here.
Okay.
Over 570 products.
Wow, that's a lot.
Reaching a global network of over 500 customers.
That's incredible.
In something like 45 countries. So that kind of spread, it helps them weather those economic storms.
For sure.
And tap into all those diverse markets.
So they're not putting all their eggs in one basket.
Not at all.
That's for sure. And speaking of diversification, their CDMO business is also showing some signs of
early success.
Early success, yeah.
Interesting.
And earlier than anticipated ramp up, actually.
Promising.
Which is really, really promising for their future growth.
Yeah, especially considering those overall challenges in the global chemical industry.
Absolutely.
This CDMO boost, suggests they're strategically positioning themselves to capture that growing slice of the market.
For sure.
And if you're wondering how they're managing to thrive in this kind of environment, their profitability figures offer some clues.
Let's get into the nitty-gritty.
Okay, let's do it.
Their EBITDA, earnings before interest, taxes, depreciation, and amortization.
All that good stuff.
Shot up like a whopping 97.2% year over year.
Really?
Yeah.
Wow.
Landing them at R's 489 million with their EBITDA margin. Expanding from 14.4% in Q2 FY24 to a very healthy 19.8%.
Okay, so a significant jump showing they're not just growing, they're
becoming more efficient. And profitable as they scale.
And it gets even better.
Oh.
When we look at their PAT, the profit after tax.
You're telling me it surged by 155%.
Wow. 155%.
Year over year.
Seriously?
Yeah, hitting R's 375 million.
Okay.
Which translates to a PAT margin of 15.2%.
That's impressive.
Seriously impressive.
Right. These figures,
yeah,
they point to a company that's
firing on all cylinders.
Yeah. But here's something else to consider.
Okay.
It's not just a domestic success story.
Right.
A significant 76% of their business this quarter.
Wow.
Came from exports.
Okay.
So, highlighting that global reach.
Yeah, for sure.
And speaking of expanding their global footprint.
That big regulatory win in Japan, their Sachin facility snagged a good manufacturing practices compliance declaration from PMDA Japan.
That's a big deal.
It's a pretty big deal.
Yeah.
It opens doors for them in a major market like Japan, and it reinforces, their commitment to meeting those stringent international quality standards.
For sure.
It definitely sends a strong signal to
investors.
Investors, and potential partners.
Absolutely.
Speaking of sending signals, the management team seems pretty bullish about the future, wouldn't you say?
Oh, yeah, absolutely.
Yeah.
They've upped their revenue growth guidance for FY25.
Okay.
Bumping it from 25% to a bolder 30%.
That's bold.
So this signals a real confidence in their ability to
sustain this momentum.
Sustain it, yeah.
Yeah.
They're pointing to a robust order pipeline. and a resurgence in demand for their core molecules as key drivers for this.
So they're not just riding a wave.
Nope.
They're seeing a clear path forward.
Exactly.
But it's not all about chasing profits, right? They're also making some interesting moves on the
sustainability front.
The sustainability front, yeah.
Yes. This is where I think Ami Organics really sets themselves apart.
Okay.
They're not just talking about ESG.
Right.
They're walking the walk.
Yeah.
Zero liquid discharge plant. Wastewater recycling. They've even achieved social responsibility certification.
Yeah.
So this shows, they're really thinking long-term about the impact of their operations on the environment and society.
That's important.
It is.
And it's not just a feel-good story either.
Right.
This commitment to ESG.
Yeah.
It aligns with what a lot of investors are looking for these days.
Absolutely.
And it can give them a real competitive edge.
For sure.
Now let's talk about this big move they made recently.
Yeah.
The acquisition of Baba Fine Chemicals. This marks their entry into the semiconductor industry.
Okay.
Which is a pretty significant shift.
It is.
So this acquisition aligns with their goal of
penetrating new markets.
Penetrating new markets, yeah.
With high barriers to entry.
Right.
It's a strategic move to
diversify their offerings.
Yeah.
And tap into a sector with immense growth potential.
Absolutely. It's a bold play for sure.
It is. Now, before we get too far ahead of ourselves.
Okay. Let's kind of zoom out.
Yeah.
Think about what all of this means for investors.
For the investors.
What should they be watching closely?
Well, there are a few key things to keep in mind. First, the growth trajectory, both of their business segments.
Right.
So pharmaceutical intermediates and specialty chemicals.
Okay.
Second, how those CDMO activities continue to expand.
Yeah.
Third, how smoothly they integrate.
The acquisitions.
The acquisitions, like Baba Fine Chemicals.
Makes sense.
And finally, whether they can maintain this impressive profitability.
All great points.
Yeah.
Remember, we've only just scratched the surface here.
Right.
This is just a quick download.
Yeah. Quick snapshot.
On Ami Organics Q2 FY25 performance.
Yeah, but there's so much more to unpack.
There is.
And I think a really thought-provoking question for you is, does Ami Organics move into semiconductors signal a broader trend of chemical companies
diversifying into these high-tech sectors?
It definitely raises some interesting questions.
Yeah. About the future of the chemical industry.
For sure.
So something to ponder as you dig deeper
Absolutely.
into their story.
Yeah, it's definitely a company worth watching. Yeah, it really does.
Makes you think.
Makes you think about where the industry is heading.
Yeah.
And
this move into semiconductors. Kind of, it fits perfectly with Ami Organics' overall journey. If you look back.
Yeah.
They've always been about
evolving.
Yeah, evolving and adapting.
Right.
I mean, they started as this small partnership firm back in 2004.
Wow.
And they've steadily climbed the ladder, hitting some impressive milestones along the way.
Yeah, like what?
Well, in 2015, they reached that Rs 1,000 million.
Revenue mark.
Yeah.
Okay.
And then just a few years later, in 2022, they crossed the Rs 5,000 million mark.
That's a remarkable trajectory.
It is.
Especially, for a company in such a competitive industry like chemicals.
Yeah, for sure.
I mean, they've clearly got a knack for
identifying opportunities
and executing their strategy.
Yeah.
But it's not just about the numbers, is it?
Right.
They've also racked up a whole bunch of awards and recognitions.
Yeah. Accolades for everything from
research and technology
to entrepreneurship. And safety. Safety. Wow.
So it shows, they're not just focused on
the bottom line.
Yeah, the bottom line.
They're committed to excellence.
Across the board? Yeah, in all aspects of their business.
So I'm noticing a pattern here.
Okay.
Consistent growth.
Dedication to excellence.
And a
forward-thinking approach.
Yeah. It makes you wonder,
what's the secret sauce?
What is driving this company's success?
Yeah.
Well, if we kind of peek under the hood of their business model, a few key ingredients kind of stand out.
Like what?
Well, first, their focus on products with high barriers to entry.
Okay, explain that.
So they specialize in these niche products with limited competition, particularly in that profitable chronic disease market.
So they're strategically positioning themselves where they can really shine and command, a strong market presence.
A strong market presence, exactly.
Clever.
It is.
Right.
And to back that up, they place a huge emphasis on
research and development.
Research and development, yeah.
Okay.
Constantly pushing the boundaries, developing those innovative products for the global market.
So they've filed for...
They've even filed for 15 process patents for advanced pharmaceutical intermediates.
Okay.
10 of which have already been granted.
That's impressive.
It is.
It seems like they're not afraid to invest in their future.
Not at all.
And that investment seems to be paying off.
It is.
Especially with, their ability to be first to market.
Yeah, with so many of their products.
Yeah.
That's a key advantage in this industry.
Right.
They're known for launching products ahead of the curve, especially for drugs going off patent.
Okay.
This allows them to, capture market share early on.
Right.
And establish themselves as
a leading supplier.
That leading supplier, yeah.
So it's all about anticipating those market trends.
Yeah.
And staying one step ahead.
One step ahead.
And it seems like, they've built a solid reputation.
As reliable
and innovative
supplier.
Yeah.
They've earned that, coveted preferred supplier status for key molecules. For key molecules. With many of their clients.
And remember, that diverse customer base we talked about.
Right.
Well, that's spread across...
different regions.
Yeah.
Which helps mitigate risk and ensures that steady stream of business.
Sounds like they've got...
a well-oiled machine.
Yeah. But no business is without its challenges.
Well, of course not.
So... what are some of the headwinds that they might be facing, and how are they navigating those?
Well, one thing that jumps out from their financials is the substantial increase in their long-term borrowings.
Okay, so how substantial are we talking?
Well, it's gone from Rs. $6 million in FY21 to a significant Rs. $1,136 million.
Wow, that's a big jump.
It is.
In FY24.
Yeah.
So what's driving that?
Right.
And should investors be concerned?
It's a valid question.
Yeah.
While the investor presentation doesn't explicitly address this, we can make some educated guesses.
Okay, like what?
Well, the recent acquisitions, particularly Baba Fine Chemicals, likely required a significant amount of capital.
That makes sense. Yeah. They're expanding
into new areas. And that often comes with upfront investment.
Exactly. But this borrowing strategy does raise a question. Their debt management.
Okay.
Will they be able to generate
enough cash flow? To comfortably service this debt.
Right.
While keeping up their growth momentum.
That's the question.
That's a good question.
It is something investors should definitely keep an eye on.
So it's a bit of a
balancing act.
But
on the flip side, they are laser focused on
cost management
and process improvements.
Okay.
Which is essential for any company.
Right.
Especially one growing.
As rapidly as Ami Organics.
Exactly. So they mentioned sourcing around 71% of their raw materials from domestic vendors, which, helps them manage supply chain risks.
Right.
And potentially
keep costs down.
Yeah.
In this volatile global market.
That's smart.
It is.
And they're not just relying on traditional methods. They're exploring
new technologies.
Efficiency, and sustainability.
Yeah.
Right.
They highlight their use of continuous flow processes.
Okay.
Which are often more efficient.
Sustainable. Compared to those traditional manufacturing methods.
That aligns perfectly.
It does.
With their commitment.
To ESG.
And
that's not just talk.
Right.
They're putting their money where their mouth is.
Yeah. Walking the walk. You mentioned earlier that they have a presence across
the entire value chain. From NCEs to finished products. Can you break that down a little bit further?
Sure. I think it's important to understand how they've structured their business to meet that wide range of customer needs.
Okay.
So they supply NCE molecules to innovator pharma company.
Okay.
The ones developing
brand new drugs.
Yeah.
So they're working
at the cutting edge.
Of pharmaceutical research.
It's impressive.
It is.
Yeah.
And they also supply...
They also supply intermediates.
Intermediates.
To these innovator companies. Both for products that are still under patent.
Okay.
And those that have...
Gone off patent, yeah.
Okay, so they're covering all their bases.
They are.
Working with companies at various stages of that drug development cycle.
Exactly. It's a smart...
diversification strategy.
Diversification strategy.
They're not putting all their eggs in one basket.
Now, on the generic side, they supply intermediates...
To API manufacturers.
To API manufacturers, who then, produce the active pharmaceutical ingredients used in those generic drugs.
So they're not just focused on
the big name brands.
The big name brands.
They're catering to
the generic market.
The generic market as well.
Exactly.
Which makes them,
less reliant.
Less reliant, yeah.
On any one particular segment.
Of the pharmaceutical industry.
Of the pharmaceutical industry, right?
Exactly. And then there's that CDMO business we mentioned earlier.
Right.
How does that fit into...
Their overall model.
Their overall model, yeah.
So CDMO, or Contract Development and Manufacturing Organization, is essentially a service they offer to larger pharma companies.
Right.
Think of it like
a specialized
outsourcing service.
Outsourcing service, okay.
So they can develop and manufacture specific intermediates.
Okay.
Or even finished drug products on a contract basis.
So it's a way for those bigger companies to tap into Ami Organics
expertise
and capabilities
without having to, build out all those operations themselves.
In-house.
In-house, yeah.
And it's a growing segment of the pharmaceutical industry.
It is. Companies are increasingly looking to outsource certain aspects of their operations.
And Ami Organics is
in a great position.
In a great position to capitalize.
To capitalize on that trend.
It sounds like they've really thought of everything.
They have.
But I'm curious. We talked a lot about...
The pharma side?
The pharma side.
Of their business.
Of their business.
Yeah.
What about specialty chemicals? What are they doing?
In that space.
In that space, yeah.
Great question.
Yeah.
Specialty chemicals represent...
A significant growth opportunity.
A significant growth opportunity.
Yeah.
Even though it's a smaller...
part of their business.
Of their business right now.
Right now, yeah.
So they're active in areas like...
Cosmetics. Fine chemicals,
agrochemicals,
and of course,
now semiconductors. Through that acquisition.
Through the acquisition of Baba Fine Chemicals.
That's Baba Fine Chemicals.
So it's a diverse mix of products and applications.
It is.
What's their strategy for
growing this segment?
Growing this segment, yeah.
Well, they're focused on a few key areas.
Okay, like?
First, they're constantly searching for new applications. With high barriers to entry.
Okay.
This gives them...
A competitive edge.
Yeah.
And protects their margins.
Their margins make sense.
Right.
You're not afraid to be...
Pioneers. Venturing into those new territories.
Right. And second.
They're
all about operational efficiency.
Okay.
Always looking for ways to, streamline their processes and deliver better margins.
Which is key.
It's essential.
In such a competitive industry.
Yeah.
Efficiency is crucial.
Absolutely.
To staying profitable.
And finally, they're leveraging their existing...
capabilities.
Technologies,
to expand into...
adjacent areas.
Okay.
For example, they're using their expertise in electrolyte additives to penetrate the battery chemicals market.
So they're not just branching out randomly.
No,
they're building on
their existing strength.
It's
a strategic approach to growth.
Okay, so we've got a good handle on,
their business model.
And strategy.
Yeah.
Now let's talk about the people.
The people behind the scenes.
The
masterminds.
The masterminds
driving this success. It all starts with the founders.
Okay.
Narwesh Kumar Patel. And Chetan Kumar Vagasia.
Okay.
They've been with the company.
Since the beginning,
yeah.
And have a wealth of experience.
In the industry.
So they're not just figureheads.
No.
They're actively involved.
In
the company's operations.
Absolutely. So Naresh Kumar Patel is the executive chairman.
Okay.
And managing director.
Okay.
And he's deeply involved in...
the chemical engineering,
yes.
And product implementation side.
Of the business,
yeah.
So he brings that deep understanding...
the technical aspects.
And then Chetan Kumar Vagasia as one of the co-founders, heads of procurement and administration.
So it sounds like they have
a great balance of expertise.
A great balance of expertise at the top.
At the top, yeah.
But what about
the rest of the leadership team?
Well, they've built a strong team of experienced professionals.
Okay.
So their chief financial officer, Pavan Shah.
Pavan Shah. Okay.
Is a chartered accountant.
Okay.
With a background in the pharmaceutical industry.
And they have
Dr. Ajit Kumar Chaubey.
Okay.
As president technical.
President technical.
Who holds a Doctor of Philosophy degree.
In chemistry.
In chemistry, yeah. So they've got
the financial and technical expertise covered.
Financial and technical expertise covered.
It seems like a solid team.
A solid team.
Yeah.
But it's not just about experience, is it?
Right. What about their
corporate culture?
Corporate culture.
And values.
And values, yeah.
Well, if you look at their investor presentation, they really emphasize their commitment to
those ESG principles.
The G principles, yeah.
Environmental.
Social and governance.
The governance, right.
So it suggests
a strong focus on ethical
sustainable practices. They've also talked about their dedication to, employee well-being.
Employee well-being.
And social responsibility.
Social responsibility, yeah.
Their Sachin facility is SA 8000.2019 certified, which means they meet those strict standards.
For fair labor practices?
For labor practices, and they've also implemented
a robust occupational health and safety management system at that facility.
So they're putting their money where their mouth is.
They are.
When it comes to
social responsibility.
Social responsibility.
And employee safety.
And employee safety.
And in terms of governance, their board has a good mix of
independent
directors. Their audit and nomination and remuneration committees are headed by independent members.
Which is always a good sign.
The good sign.
Yeah, strong corporate governance.
It shows that commitment to transparency.
Transparency.
And accountability.
And
which is reassuring for investors.
But even with all these positive factors, we need to be realistic. No business operates
without risks.
So what potential challenges?
Yeah, what potential challenge?
Ami Organics encounter?
Right.
One of the big ones is that inherent
cyclicality, of the chemical industry.
So
if the global economy takes a downturn, demand for their products could soften.
Right.
And they even acknowledged, that they're operating in a challenging environment.
Right now.
So
how they navigate these potential headwinds, it'll be crucial.
It'll be key.
Yeah.
And while their diverse product portfolio and global customer base, it provides some insulation. They're not immune to those larger macroeconomic forces.
So keeping a close eye on the global economic outlook
is definitely warranted.
For sure.
What else should we be watching out for?
Well, competition is always a factor in any industry.
Of course.
And chemicals are no exception.
Yeah.
They face competition from both international players. So maintaining that technological edge and cost competitiveness.
It will be key.
It'll be key to staying ahead of the pack.
Especially
as they
venture
into new areas like semiconductors. That's a whole new ballgame.
It is.
With its own set of challenges.
So execution risk is definitely something to consider.
For sure.
Are there any other red flags on the horizon?
Well,
yeah.
Raw material price volatility is another factor.
To keep an eye on.
So keep an eye on,
They've taken steps to mitigate this risk, right?
They have.
By sourcing a lot of their material.
Domestically,
but but fluctuations in those input costs
could still impact their margins.
For sure.
Makes sense. So monitoring commodity prices is essential.
It's key.
What about regulatory risks?
Right.
The chemical industry is
heavily regulated.
Yeah. So changes in
environmental regulations
or
pharmaceutical industry standards.
Yeah, pharmaceutical industry standards.
Could require them to
make significant investments.
To
stay compliant.
And these regulatory hurdles, they can sometimes pop up unexpectedly.
Right.
They do have a good track record
on
compliance so far.
Okay.
But it's definitely a risk factor.
For investors.
To consider.
Okay, so we've got cyclicality, competition,
raw material prices, and regulatory changes. All on the risk list.
Yeah. Anything else we should be thinking about?
Well, their recent acquisitions, while strategically sound, also come with some inherent risks.
Right. Integrating those businesses smoothly.
Yeah.
And realizing those anticipated synergies.
It's easier said than done.
It is. It can be tricky.
It can be. There's always that risk of
cultural clashes.
Or
unforeseen liabilities.
Unforeseen liabilities cropping up.
Yeah. So how well they manage those integrations will be a key factor in their success.
Absolutely. And finally, we can't forget about
the human element. Attracting and retaining top talent.
Yeah, especially in a competitive field.
Like theirs.
It's essential.
A company is only as good as its people.
Exactly. So while Ami Organics has a lot going for it, investors should definitely keep these potential risks in mind.
Yeah.
And watch how the company navigates them.
Okay, so those are all excellent points.
Yeah.
Now let's shift gears a bit and look at their financials in a little more detail.
All right, let's do it.
What are some key takeaways?
From their balance sheet.
Yeah.
Well, one thing that stands out is their strong asset base. They've invested heavily in property, plant, and equipment.
Okay.
Which has grown significantly in recent years.
That's a good sign.
It is. It shows they're investing.
For the long haul.
For the long haul, yeah.
And it's not just physical assets. Right. They're intangible assets.
Yeah, including goodwill.
Goodwill and intellectual property.
Intellectual property also represent a significant portion of their value.
So they've got
a solid foundation.
A solid foundation to build on.
Yeah.
But of course, we also need to consider their liabilities.
Right. And we talked earlier about
those increased borrowings. Yeah. So it's important to understand, what makes up those liabilities. Yeah. Is it mostly long-term debt?
Or there are other
major obligations.
Yeah.
So
long-term borrowings make up a sizable chunk.
Okay.
But they also have, trade payables and other current liabilities to manage.
So cash flow management.
Yeah, will be critical for them.
They need to make sure they have
enough cash on hand.
To
cover those short-term obligations.
Right.
While also
investing in growth. And servicing that long-term debt.
It's a balancing act.
What about their equity position?
Right.
How has that changed over time?
Their shareholders' equity has actually grown.
Impressively.
Quite impressively.
Yeah.
It's largely due to the profits they've generated, retained over the years.
So they're not just relying on debt to fuel their growth.
They're generating strong internal cash flow.
That's a good sign.
It is for investors.
It suggests
they're running a profitable
and sustainable business.
It's a sustainable business, yeah.
Now let's turn to their income statement.
Okay.
What are some of the key trends we're seeing there?
Well, the most obvious one is that consistent
revenue growth.
We've
been talking
about. Their top line has been expanding at a healthy clip. And that's been driving
their profitability.
And their gross margins have also been impressive.
Okay.
Hovering around 40%.
That's a sign of a company that's,
able to control its costs. And command premium pricing. Which is always a good thing. And they've been able to manage their
operating expenses
effectively.
Which allows them to achieve
strong
operating leverage.
So their profits are growing at a faster rate
than their revenues.
That's
what we like to see.
It's a sign of a
well-managed business.
So to sum it up, strong revenue growth, healthy margins, effective cost management, and a solid track record
of profitability.
They've
certainly got a lot going for them.
They do.
But what does the future hold?
For Ami Organics.
Yeah. What's the road ahead look like?
Well, as we mentioned earlier, their management team seems quite optimistic.
They've raised
their revenue growth guidance.
For
FY25.
Which signals
confidence in their ability to,
keep this momentum going.
So
they're not just riding a wave.
Seeing this clear path forward. And they're making those strategic moves to position themselves
for long-term success.
Their
Their acquisition of Baba Fine Chemicals is a clear sign
of their ambition.
Of their ambition, yeah.
To expand into new high-growth markets.
It shows they're not afraid to be bold.
Right.
And make big bets.
Make big bets on the future?
On the future and their commitment
to those ESG principles.
To ESG principles and sustainable practices.
Is another positive sign.
It is a positive sign.
Investors are increasingly looking for companies that are not only profitable, but also
responsible.
Responsible.
And ethical.
And ethical.
And Ami Organics seems to be
ticking all the boxes.
Ticking all the boxes.
Strong financials. Solid track record of growth.
Yep.
Forward-thinking management team.
Right.
And that commitment.
To sustainability.
To sustainability.
But as with any investment.
Yeah.
It's crucial.
To weigh those potential rewards.
Against the risks.
Against the risks.
Right.
And we've discussed some of those key risks.
We have.
Investors need to carefully consider.
All those factors.
All those factors.
And decide for themselves.
Oh, if the potential upside outweighs the downsides.
It's a personal decision.
It is. And it's always a good idea to
do your own research.
Do your own research.
Maybe consult with
a financial advisor.
A financial advisor.
And ultimately
make an informed decision.
Make an informed decision based on, your individual investment goals.
Right.
And risk tolerance.
Excellent advice. So to bring it all back.
Yeah.
Why did we take this deep dive
into Ami Organics financials?
Into Ami Organics financials in the first place?
Well, the goal was to give you, the listener,
the
insights you need.
To really understand this company.
To really understand this company. I mean, a potential investor.
A potential investor. Someone working in
the industry.
The industry or
just curious.
Just curious.
About this company.
We wanted to go beyond
those headlines.
Those headlines.
Just really get into the details.
Right. We've looked at
their business model.
Their business model.
Their
strategy.
Their financial. Their leadership.
And potential risks.
Hopefully
you now have
a much clearer picture.
A much clearer picture of Ami Organics.
Both its strengths and its weaknesses.
Absolutely. But remember, this deep dive is just a starting point. We encourage you to,
dig deeper.
Dig deeper, read those investor presentations, those financial reports.
Form
conclusions.
And if you have any
follow-up questions,
need any clarification
on
anything we've discussed,
don't hesitate to reach out.
Yeah, we're always happy to help.
We're here to support you on your journey to becoming a
well-informed,
and
savvy investor.
Remember,
the more you learn,
the
better equipped you'll be
to make those smart decisions.
And
achieve your financial goals. That's a wrap. For today's deep dive into Ami Organics.
Until next time.
Happy
investing.
Happy investing, everyone.